Hey you guys, welcome back to Young Money Investments. In today's video, we are going to be talking about the S&P 500. We are going to be talking about how to make money when the S&P 500 pulls back. That is my plan. I see the S&P 500 having a pullback fairly soon, and I'm going to talk to you about how I can make money to keep my swing trade account growing. Let's talk about it right now, today on Young Money Investment. Alright guys, and before we get started, as always, please hit that thumbs up button. It helps out their channel tremendously. Like, I can't tell you thank you enough. Like, it means a lot. It means a lot to my heart when you smash that thumbs up button. And Elon Musk loves it too, and he smashes the thumbs up button, so you should too. Alright you guys, so a question a lot of newer investors tend to have is how can you make money when the market is bearish, when the market is trending down, when a lot of the stocks that you're holding in your account tend to go down? The answer to that is an inverse leveraged ETF called TVIX. Now, TVIX is not something that I would necessarily recommend you just go out and buy some shares in right now because the market's high and you think it's going to go down. We're going to talk about all those things. We're going to talk about my thesis, my theory about that. So that's definitely going to be here in the video today. But one of the things I do want to point out is this is a leveraged ETF. So an ETF, or ETF in general, stands for exchange traded funds. So basically it is a company, there's an exchange, there's a group that makes this ETF. Basically the cool thing with an ETF is it allows you to buy fractions of companies or commodities or parts of multiple companies in a little smaller priced share. So let's say you only have $100, you can buy multiple pieces of a particular commodity. For example, the S&P 500. No one person that's usually starting out in the stock market can buy one piece of all 500 companies or short a stock or share equally of the top 500 companies that are in the S&P 500. Here are the 3 basic steps on how an ETF works real quick for you. So an ETF provider considers the universe of assets, including stocks, bonds, commodities, or currencies, and creates a basket of them with a unique ticker. Investors can buy a share of that basket like buying shares of a company. Buyers and sellers trade the ETF throughout the day on an exchange much like a stock. The one thing about the ETF though is that the company that started that, for example Vanguard, will take a small commission or chunk out of these exchange traded funds, and they do rebalance them sometimes on a daily basis. For example, with 3x leverage ETFs, so that they can still stay in line with how that particular commodity, in this case the S&P 500, is moving on a daily basis. So now that we got that out of the way, let's talk a little bit more about TVIX and the S&P 500. Alright, so currently here we have the 180-day 4-hour chart for the S&P 500, and you're going, Cameron, okay, why are you interested in buying TVIX? Well, TVIX being an inverse ETF of the S&P 500 or the SPY, it is plausible and understandable why you would want to be buying or shorting, buying an inverse ETF or shorting right here at the top. 302 right here, my thesis for this is 302 has been a level of obviously resistance for quite some time. We can see before any of these pullbacks that we've seen here in 2019, 302 was kind of the benchmark before we had this pullback. Again, after this pullback that we had back here, kind of starting back in August, we saw it kind of start to run up all the way through here in September. And then in October, we had a little bit of a pullback again, but it reached highs of 302. Now, again, we are getting back up to this current high. Because we are getting close to that current high, that makes me go, we are hitting a level of resistance that has seen resistance multiple times, this being almost the 3rd time within this past year or even 6 months that the markets have not been able to break over. One of the things with TVIX that needs to be noted and taken into consideration is that this is not a good long-term buy and hold type thing. Anytime you're trading 3x leveraged ETFs, like I said previously, those are going to get rebalanced on a daily basis in order to match the overall trends and patterns of the market. Now, what that does for you is it makes it a continually less valuable asset the more you hold over time. It's only meant to be used to scalp, particular plays in cases like this when there is a little bit more volatility in the market, or there is a good higher probability that we are going to see a pullback. You don't just go, okay, I'm just going to buy this and hold this long term, especially because it's an inverse of the overall markets. And as everyone knows, over the past 5, 10, 15, 20, 50, 80 years, the markets always go up. So if we take a look here, as you can see, TVIX has just continued to always trend down. One more thing that's going to be crucial to making money on this trade is to smash that thumbs up button. One more thing I want to explain to all you new investors as well is that this means that you do not base your technical analysis off of the charts for TVIX. Anytime that you are actually going to be doing your technical analysis, always look at SPY, and that is where you're going to be able to look at your support and resistance, where you're going to be buying, where you're going to be selling. TVIX is simply just going to be the commodity that you buy in order to make money as the markets go down. In terms of buying and selling, I am currently going to be buying at these lower levels down here at 925. Now, as we can see on the RSI, we're sitting down here at an RSI of about 22. I, again, do not do my technicals off of this, but I told myself anything below $10 was going to be a fairly good area to buy. And with it sitting down here in the mid to low $9 range, I see this as a great buying opportunity for me personally. Now, anything usually, what I would say, anything below $9, that's where I'm going to have to cut my losses and go, okay, we're too overextended, and it could just continue to drop. So the next question is, how does that relate to the charts on SPY? So as we can see here on the SPY, we can see that we are currently here at all-time highs or near all-time highs right now. We can see where it has taken a double top before it trended down over the last pullback that we recently had back here at the end of September, beginning of November. This means that my current plan with this is that if we see it break over 303, that's going to be basically an indicator to me that it's probably time to cut my losses and this isn't going to be a great play. So what I'm going to do on here is I'm going to go and right click and I'm going to create an alert right here at 303. So at or above 303, I'm going to give myself a reminder that it's time to get out. And I'm going to remind myself. That way, I know that it's time for me to cut my losses on this particular trade. Now you're probably going, okay, so that's the bad part. What's the good part? Well, basically my plan with this is if it does start to trend down, we should see this start to come down to the 300 level and then crack through that fairly decently. My first level of selling, where I will actually start to cover and take profits, is going to be down here right around $298. If there is strong selling pressure and we do see that the SPY is reversing pretty heavily, I will continue to hold and size out, usually by anywhere between a quarter to half of my position multiple times over until it's time to finally get out and the markets start reversing up. Also, negative news catalysts start to come in and there are problems with the trade war. If there's problems with impeachment, if there's problems with whatever, I'm going to continue to add to my position as it continues to fade. One of the things I didn't do nearly well enough when I started trading was learning that you can size in as the stock starts to go your way. As that uptrend starts to take place, you can continue to buy up. You don't have to be the one that's averaging down, 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 down as the stock's losing value. You need to cut those losses quicker and add and average your cost basis up if that pattern is showing a strong uptrend pattern. That is key. Next level of support we're going to see after the 298 area, which is going to be right here, is going to be down here at about the 295.50 mark, or 295.45, I guess you could also say down here, 295.11. I would say down here you're pretty, I would say fairly safe to call this 295 mark another level of support slash resistance. We've seen it previously over here being a little bit lower down here at about 294, but starting to average out between 295, 294. And if we could see it continue down, you're just going to be making a ton of money if you're holding TVIX. That's the reality, guys. So I hope you found this insightful. I hope you found this helpful. If you did, please smash that thumbs up button, turn on that bell notification, subscribe to the YouTube channel. I'm gonna be releasing more videos, just basically whatever you guys wanna watch. That's what I'm here to release. And also some of the videos that I wish I knew when I got started trading in the stock market. News and just content that I know just isn't out there, or it's not as like put into the words that I think most people understand. That's my goal, is to make it available for the masses, because guys, at the end of the day, trading is so important. I don't think enough people in this world realize that stocks, investments, and obviously swing trading as well, and just day trading in general too, can be so helpful and beneficial. I will catch you guys in the next video. Talk to you later. Bye.